Very good morning. My name is Malcolm Grahamwood, and today I'm doing a Core Finance CEO interview. My guest today is Andrew Knott, who is the CEO of Savannah Energy. Welcome back, Andrew. Nice to see you again.
Thank you, Malcolm. Good to be back.
Excellent. Now, there's a lot been going on. There's always a lot going on at Savannah, but maybe, especially after recent, the changes that have been going on, and so you can give us an overview of Savannah for those people who don't know in detail about the company. So, if you could give us a sort of thumbnail sketch to begin with, that would be great.
No problem. Okay, so Savannah, we've been listed now for just over 5 years. The company itself is focused around West African energy opportunities. We're active in 2 countries, Niger and Nigeria. In both countries, we are involved in projects which are material for the countries themselves. In Niger, we have a development, appraisal and exploration project in a very prospective basin, which we can talk about more later on if you'd like. Which is part of a wider project, which is ultimately going to contribute 24% plus to the country's GDP. In Nigeria, we own stakes in 2 large and operate stakes in 2 large oil and gas fields, and a midstream business, which is the principal distributor of gas in the southeast of Nigeria. And in aggregate, that business currently supplies around 10% of the gas required for the country's power generation. Both businesses have a lot of growth in them. In Niger, it's about bringing cash flows on stream from the existing discoveries that we've made. We drilled 5 exploration wells, made 5 discoveries, and then going after the very large bank of additional exploration prospects we've identified, which currently sits at about 146. In Nigeria, it's all about price optimization and capacity utilization increasing. In Gas, the asset that we have is very significantly underutilized, and the incremental cost of adding new customers is relatively limited. So there's a big push there to increase the throughput and volumes. And again, we could talk more about that later, and also the very significant financial and operational improvements we've already put in place in that business.
Excellent. Well, yeah, I do have obviously a question on cash flow and timings and so on. You recently announced your first set of results following the final completion of the Savannah Energy acquisition. What are the key takeaways from what you produced in those results, Andrew?
So, look, I think in full year 2019, there was only a 6-week contribution from the assets that we acquired in Nigeria. I think the key thing is to show the difference in the pro forma performance of those assets versus when we started the process of acquiring them to what we've managed to drive into them now. So, and the two key metrics. One is cash collections, which are up 40% since when we started the process, and production, which was up again around 40% since we started the process. And really, when you look at the headwinds that a lot of businesses and oil and gas businesses have faced, whereby they've really struggled to maintain production with the recent macro events, the fact that we've managed to so dramatically improve the operating and financial performance of the business, I think is quite important. I would also say that from a commercial perspective, we signed the first new gas sales agreement in the period for nearly 6 years that the business has signed with a new big power station customer. And we're very, very clear that there's additional commercial agreements that we expect to be able to announce prior to the end of the year, which will, again, further enhance the capacity utilization and revenue generation outlook at Africa. So I would say it's much more about the pro forma things we've achieved, and then also the guidance that we provided. So what we're saying is that we expect there to be over $200 million of revenue generated by the company in financial year 2020. The cost base to be about $70 million, which will leave quite a significant amount of cash available for us to pay down debt and to run the business.
So, I mean, that really is a very impressive cash collection rate. And obviously, we knew that the production numbers were going to increase, and cash collections very good. Was that straightforward enough to achieve? Did you? You'd obviously expected it, but it seems.
So look, I mean, in terms of, well, so for those of your viewers that aren't aware, when we bought the Nigerian assets, there were a whole lot of challenges in the business, and it's quite a complicated transaction in terms of what we had to do to make the acquisition work, and then et cetera, et cetera. But ultimately, the net result of dealing with all the financial stakeholders, the governmental stakeholders, to get the deal done was really simple, because we effectively just bought 3 assets for cash. In terms of one of the key things that we did when we were doing that process was we completely transformed the credit risk profile of the business that we were acquiring. Prior to us acquiring it, the business did not have a significant amount of investment grade credit customers. Now, because we've got JP Morgan and the World Bank to provide credit support to our principal customer, that has moved the investment grade credit risk profile of our the credit risk profile of our customer base to over 90%. So with that in place, with a Standard Chartered Bank guarantee on one of our customers about 30%, with a JP Morgan guarantee in place for the other customer, which is just over 60%, that really puts us in a very strong position. We set, and our liquid sales have always been sold to ExxonMobil, which from a credit risk perspective is obviously very attractive. So I think with the changes that we've made, the cash generation in the business is something which, and the cash generation profile of the business was really transformed by that. And you've seen that with the numbers that we've announced in terms of the improvements, how that has impacted the numbers.
Good. So obviously, you know, this is, I'm going to come back to cash a little later on in a sense, but it means that you remain, I mean, you are extremely optimistic about not just revenues, but profitability through this year and next year.
Yeah, very much so, very much so. I mean, we've got the building blocks and a very, very focused management team, and it's really about building that revenue base so that we can enhance the profitability and enhance the revenue is what we're very focused on. And we've got the right incentive structure in place with our people to hopefully ensure that happens.
And clearly, there's a feeling in the marketplace that there's a huge increase in value in the shares to come. I'll come back to that in a second. But clearly, this is something you can not only do, but you can do it from your existing asset base as well as other assets you might be considering taking on as well.
Yeah. So look, I mean, if we look at the sort of the real opportunities that we have as a business. So Iraqi gas, as I said before, it's about adding new customers. Why would we be able to source new customers? Firstly, there's a very strong demand dynamic in Nigeria. Secondly, given the sunk cost that we have made, I mean, there's over $1 billion of invested capital in that business, the Nigerian business. What that means is that the replacement cost, the ability for somebody else, the economics associated with somebody else trying to replicate our infrastructure to commercialize gas, is very disadvantaged. It's much better to work with us. So we're the natural person to be with the spare capacity we have, with a natural partner for anybody who's looking to commercialize gas or to buy or to source gas for power generation. Within that, you then have a situation, okay, so what competes with gas for power in Nigeria? The reality is it's basically diesel. So the issues with diesel are, even in the current depressed macro environment, it's still nearly twice as expensive as our gas, and well, more than twice as expensive as our gas. And the reliability of piped gas is much higher than diesel. One of the great ironies of Nigeria is that, unfortunately, despite the fact it's a massive net exporter of petroleum, it's a massive net importer of petroleum product. So that means that diesel is not a reliable source because you're relying on imports, et cetera, et cetera. So we can provide a much cheaper and a much more reliable, in our view, source of fuel for power generation. And I think what's important is our business doesn't miss. Our business, if customers nominate gas, they get given the gas. In the pandemic, that's been very, very clear. Like, we've ramped up our production by this amount at a time when the gas shortage for power generation to the grid increased by 30%. So at the same time as we've been ramping up power and stepping up and stepping in, others have let the grid down. They haven't been supplying the gas that the grid needs. So I think that's testament to our business, and we benefit. A lot of that is because other people supplying gas into the grid, typically it's associated gas. So what that means is it's gas which is associated with oil production. So when oil production comes down, such as you've seen in this environment, OPEC cuts, lack of investment incentivization in the low oil price environment, et cetera, et cetera, et cetera. That's quite a significant knock-on effect to gas production levels, which then has a knock-on effect to power generation. And any economy needs power to grow. Any society needs power to live. So it's a very important service that we're providing. I would say, Malcy, there's an awful lot of information in our annual report. Our annual report is 177 pages. There's very detailed sections on the assets, on the key governmental stakeholders, on the social contribution we make as a business, on the sustainability of that social contribution, et cetera, et cetera. I think it's much bigger than a typical annual report for a company of our size, because we're very, very keen to make sure that people fully understand the business. The other thing I would say is we also published a prospectus this year, an admission document. So the amount of available information on our company is very, very high and very, very current.
So you've sort of become the poster boy of the gas market over there, and presumably, therefore, you're sort of, the government and the agencies are very much supportive of you.
Look, we have good partnerships throughout the gas value chain and throughout Nigeria. But look, everybody's going to have challenges at different points with what's going on in the macro. And the important thing is you work with your stakeholders, not against them. And that's what we're trying to do. And the good thing is we're providing something that really is very, very important. So that the fact that we're providing energy is something that means it's very high priority in country, and is something which everybody wants to support and to try to make work.
So that's brilliant. So going forward on that front, do you see that the connection between the growth of your existing businesses or adding on other businesses, or that you similar to the ones that you bought, increasing market share, increasing geographical perspective within the country? How does that all work for those who are looking at where you might grow?
Okay, so in terms of the organic growth, you maximizing the additional infrastructure in Nigeria, that's pretty clear. In Niger, it's also pretty clear how you grow. Okay, so you deliver that R3's development program, and then you start the exploration. The good news about the exploration is the basin-wide success rate is 80% across a very long time period, and also across a very statistically relevant portfolio of exploration drilling, well over 100 exploration wells. So there's a big opportunity there, and we have about half of the R1, R2, R3, R4 cover about half of the basin. So we've got a very good position there. And there's a lot of infrastructure, so if you being in place and planned, which means if we make discoveries, it should be straightforward from an operational perspective to commercialize. So that's the Niger business. Going back to Nigeria, over the medium term, there's clearly an opportunity to refinance and restructure the debt so that we roll out the tenor of the debt so it matches the tenor of our contracts, and we move the cost of the debt down to a level more reflective of the fact that we've got over 90% of our revenues coming from investment grade credit guaranteed back customers. So that's another source of upside. I don't think that's necessarily something that people should be expecting in the next 6 to 12 months, but certainly it's something that we're conscious of. If it was to be achieved, we'd make a significant.
So concentrating on organic growth rather than inorganic growth at the moment.
Well, there's those three things, and then look, the oil and gas industry is in a very unusual place just now. You're in a situation where the larger oil companies have big divestment targets. By and large, they're quite behind. The area, our stomping ground, the area that we're familiar with, the area that we spend a lot of time in, which is West Africa, that's not an area which a lot of other people are spending time in. And it takes a big investment in people, relationships, and building up the operating capability, et cetera, et cetera. It's not something you can just flick your fingers and then you'll be able to do tomorrow. So anything we did do, what we said is if we did something which was inorganic of any size, it would be something which we would expect to immediately contribute to our progressive distribution policy.
Right. It's interesting because I do see quite a number of some number more companies increasing opportunities in Nigeria particularly in one or two of the UK commodity companies. And of course, given that there's a licensing round going on at the moment, have you spotted any thoughts on the fact that Nigeria might be more of a destination for companies and investor money in the last few months?
Okay, so look, I think there's a very large opportunity in Nigeria. It's still dominated largely by the super majors. There are a couple of local companies that have significant positions as well. And then there's a couple of international companies which have significant positions. And the subsurface risk, very, very limited.
Yeah.
So ceteris paribus, it's a good place to be. That said, building up the infrastructure is not and operating capability and infrastructure is not something which can be done overnight. So I think we've got a very material advantage, having a team and an asset base which has been created for nearly 10 years. So I think we're in a good position to look at such things, but I wouldn't necessarily say that the next major growth next major investment would necessarily be in Nigeria. I mean, we're very focused on West Africa as a whole. So, but again, I also don't want you to take away the wrong conclusion. Like, to be clear, the focus is on getting the existing business and growing the existing businesses. If something else comes our way, great. If it doesn't, it's fine. We've got great businesses. We've already got great businesses with good growth opportunities. And I would remind you, it took 3 years to find the original Nigerian assets. So we're very disciplined. So we'll just wait and see. But there will be opportunity for companies that are entrepreneurial and opportunistic. For sure, going to be opportunity over the next 6 to 12 months. For sure.
Yeah, I mean, I noticed that although it's taken time, that you've made the model work in Nigeria, whereas in a number of other countries that I can think of straight away in West Africa and Southern Africa, where that it hasn't worked yet, but with your knowledge of the model and your knowledge of where the investment needs to go in, it could easily happen.
Well, you see that, but maybe for smaller listed companies, but like West Africa in general is dominated by the majors, and then there's one large private French company called Perenco. But and they make very, very good money throughout the region. But and I think we differentiate ourselves is we have this strong corporate culture, we have this strong operating asset base, we have very, very experienced senior managers that have operated throughout Africa full stop, but also in many other jurisdictions. So like, I think where we see ourselves in terms of our operating capability, I really genuinely believe is quite significantly differentiated for other companies of our size.
I couldn't let you go without saying that I noticed yesterday that you and several of your board members and even one of their wives has made significant share purchases for cash, which I think is always extremely an extremely important sign for investors. This must indicate that you all think that the shares are significantly undervalued. I've read a couple of things, and I know that you've always thought the case, but perhaps you could share your thoughts with us as to why you've invested and why other investors should follow you in. And it makes you a very big holder in the company, so your confidence is high. Why should other investors follow you, Andrew?
So look, I mean, I've invested an awful lot of money in Savannah shares over the years, and I will continue to do so as and when. But I think I'm very confident and comfortable in our existing asset base and the opportunities that we are currently pursuing and are likely to pursue over the course of the coming years. And I see that our company in a very strong position to be able to grow, both top line, but also on a unit value basis. I think that in the first half of the year, I think we've talked about it in the past, there's been a lot of issues around closed periods and all the rest of it. So with the publication of the annual report, we came out of that closed period, so it gave us the ability to trade. And I mean, that's that. I believe in the value of the company. I believe in the people that we have in the organization. I believe there will be ups as well as downs, but I do believe that the general trajectory is very firmly pegged to go up. So I mean, that's my position.
And the way that the company is throwing off cash, your policies for distributions over the longer term, what have you thoughts about that?
So I think if you read my share, and I would recommend anybody seriously looking at the company to read through my shareholder letter, which is contained from the annual report, which sort of talks through a lot of these issues. But I think that over the medium term, the ability to deliver a shareholder distribution policy is clearly very, very important in terms of how a company is rated in the stock market. I think that's a big change to where we were 10 years ago. But where we are today, there's a very strong focus on cash distributions to investors. So that's very, very much front and foremost of my mind, of the executive's mind, and also our board's mind. And so the intention is, I think, given where the wider world is, the focus this year is on debt reduction. And then going into next year, and making sure we continue to drive optimizations in the business. And then next year, we would hope we're in a position to review and commence some form of distribution.
Excellent. We're nearly running out of time, Andy, but that neatly takes us on to what is always the sort of final question. You really brilliantly explained where you've got to now and how strong the company is and how attractive it looks. Where would you see Savannah Energy headed over the next 12 to 18 months? You've answered a lot of that question already, but maybe just encapsulate it for me.
Okay, so I would hope that over the next 12 to 18 months, we are delivering significantly higher production volumes because we've signed and are delivering gas to new customers. I would hope that we have commenced the R3 East development and are generating cash flow in Niger, and that we have commenced or are very advanced towards recommencing exploration activity in Niger. So that would be with the base business, and then what we do outside of the base business, let's wait and see. But with the base business, I think it's very clear where we want it to be.
That's brilliant. It makes it a really compelling investment story in my view. Thank you very much, Andrew, for joining me again on Core Finance, and I look forward to seeing you again soon and wish you a good deal of fortune in the future. Thank you very much for watching. Today's Core Finance CEO interview has been with Andrew Knott, CEO of Savannah Energy. Thank you very much for joining, and very much looking forward to seeing you again soon. Thank you.